The long weekend in the United States is over. Investors are braced for a dismal reality on a US trading floors. Wall Street is again trading on a roller coaster. Investors are flocking to safe haven assets as their nerves are frayed by the fears about a global recession. Market sentiment on Wall Street is like a hangover after Independence Day. Today, investors express risk aversion. In the New York pre-market, futures on major stock indexes shed all previous gains and went sharply down. Investors cannot dispel pessimism even in light of the good news about a decrease in the tariffs for China's imports to the United States. Top stock indexes are trading lower. The S&P is expected to trade in the corridor between 3,690 and 3,790. The market was certainly inspired by the news that Joe Biden was planning to cancel some tariffs for China with a view to mitigate the strain on global supply chains. The optimism was dampened by the recession concern. The survey released on Tuesday revealed that business activity in the Eurozone was losing momentum last month. Besides, some forward-looking indicators suggest that the EU economy might slip into a downturn this quarter. Rising living costs are putting a heavy strain on households. Investors have to steer their portfolios under tough macroeconomic conditions such as geopolitical tensions, aggressive monetary tightening, and a soaring global inflation. Markets are gripped by recession risks, analysts at JP Morgan warn. Numerous experts reckon that apart from the US, a recession could hit the UK, Japan, South Korea, Australia, and Canada in 12 months ahead. The S&P has already slumped 21% in the first months of the year. Goldman Sachs thinks that the index might plummet as low as 3,600 points if recession comes true. Experts say that is a 30% chance of recession in the US next year and a 50% chance in the following 2 years. Besides recessions, worries and gloomy forecasts, big tech stocks belonging to Alphabet, Amazon, Apple, Meta and Microsoft are wound down by their new rules approved in the EU. In addition to the Digital Markets Act, EU policymakers also passed the Digital Services Act. So online trading platforms are obliged to exercise tougher control over users' personal data and illegal content. Following the news and amid global risk aversion, stocks of used high-tech giants traded in the red in the New York pre-market today. Meanwhile, the US dollar is benefiting from a market jitters today. Its index rallied 1.3% intraday across the board. It's now trading at about 106.50. The intraday corridor for the index is seen between 106.30 and 107.20. The US dollar index has settled at the highest levels in the last 2 decades on the back of a pessimism about the global economic prospects. At the same time, the euro has been pinned at multi-year lows due to an economic uncertainty in the European Union. Such an obscure outlook is caused by the gas crisis. In turn, the gas crisis has been unleashed by a rally in the commodity prices, cutting off the Nord Stream pipeline and Moscow's use of the pipeline as a political tool for Europe and Germany. The euro has sunk by 1.63% against the US dollar to 1.0261, the lowest level since December 2002. Analysts are again speculating about the parity in the euro-dollar pair. Thus, the outlook for the greenback is firmly bullish. The greenback is setting the tone for the USD CAD pair. The loonie weakened to 1.3000. The trading corridor for today is defined between 1.2990 and 1.3060 with an upward bias. The loonie is braced today by a considerable decrease in the oil prices, and Brent future dropped 5.63% to trade at $107.17 a barrel. WTI futures lost 4.79%, and such a slump mirrors the doom and gloom in the oil market. About 15% of Norwegian oil drillers belong to the Lederne Union, which declared a strike. They demand a pay rise to cope with the soaring inflation, and the strike might worsen the energy crisis in Europe, as Norway is a major oil and gas exporter. The Norwegian energy sector accounts for 20 and 25% of gas supplies to the European Union and the UK. And what about crypto market? It's also affected by the risk of mood. Bitcoin is again trading in the red despite the fact that it has settled above support at 18,800. Taking into account Bitcoin's direct correlation to the stock market and its inverse correlation to the US dollar index, the token is expected to test support at 18,800 today. Perhaps this time the sellers will be able to break the landmark level and push the price to lower support at $18,500. Alternatively, the crypto might perk up and climb to $19,000 or $20,000. To sum up, one thing is certain: the session on Wall Street is going to be very turbulent today. Trade prudently with the InstaForex and see you on InstaForex TV channel tomorrow.